We are closing our Series B, which is led by General Catalyst. The total round size is over 67.5 million USD, which brings our total funding to over $100 million raised to date. But what's more special about this is the participation of the likes of Bain Capital Ventures, Stanley Druckenmiller's family office, Arbor Ventures, and many other leading investors such as Human Capital and others. And what this signifies for the region is three of those investors that I mentioned, General Catalyst, Stanley Druckenmiller, and Bain Capital, are actually investing for the first time in Saudi Arabia. And so this is a huge vote of confidence for their view of the growth trajectory that Saudi is on and the potential that it has over the next decade.
And so really a validation of the business case as well. Why did you want to work with these partners as funders?
Well, Dan, who wouldn't? They're literally the best in their space. They've seen what the best looks like. And what I'm super energized about is the ability to partner with them and channel that expertise into enabling Lean to further its mission. We really care about building the next generation of financial infrastructure and to enable our clients to further their missions of enabling their customers and the SMEs that they serve to have better financial tools and better financial innovation. And so it's a win-win for us, the region, and hopefully for our investors as well.
So Lean has now raised a really significant amount of capital. You're fresh, armed with this dry powder. What is the growth story moving forward? How do you plan to use these new partners and use this new money to continue to grow and build from this point on? What's the strategy?
We are just getting started. I feel like there's so much more investment that needs to go into deepening our tech stack, to expanding our payment solutions, to expanding our data services, to deepening our partnerships with banks in the region and with the support and enablement of the central banks in the region as well. If you look at the region's growth over the last 3 to 5 years, it's been phenomenal. But there's still so much more room for growth. I saw a McKinsey report last year that said that fintech revenues in the region are less than 1% of banking revenues. If you compare that with more mature markets like the UK and the US, that's almost 4 or 5%. And so we are almost an order of magnitude away from where we could be in terms of the fintech revenue and its participation to the economy. And that gives us the wind behind our sails and the motivation to keep building those tools and the picks and shovels, if you will, to enable those bold innovators to achieve their dreams.